Hey everyone! Welcome back to our channel. Today, we're diving into a topic that affects all of us, inflation. It's a term we often hear in the news, but what exactly is inflation and how does it impact our daily lives? Stick around because we're going to break it down for you. Before we get started, make sure to hit that subscribe button and click the notification bell, so you never miss an informative video like this one. So, what is inflation? In simple terms, inflation refers to the increase in the general price level of goods and services over time. When prices rise, the purchasing power of our money decreases. Inflation is measured by various indices, such as the Consumer Price Index, CPI, which tracks the average prices of a basket of goods and services. Now, let's talk about the causes of inflation. There are several factors that contribute to inflationary pressures. One common cause is the increase in demand for goods and services, which can push up prices. This often happens when the economy is booming, and people have more disposable income to spend. Another factor is the cost-push inflation, which occurs when the production costs for businesses rise. This can be due to higher wages, raw material prices, or increased taxes. When businesses face higher costs, they often pass them on to consumers in the form of higher prices. The third factor is monetary inflation. This happens when there is an increase in the money supply in an economy. When there is more money circulating, it can lead to higher demand for goods and services, which drives up prices. Now that we know the causes of inflation, let's explore its effects. One of the most immediate impacts is the erosion of purchasing power. As prices rise, the same amount of money buys us fewer goods and services. It can make it harder for people to afford the things they need, especially if their income doesn't keep up with inflation. Inflation can also affect savings and investments. When inflation outpaces the interest rates on savings accounts or bonds, the real value of those savings decreases. Investors need to be aware of inflation when considering their investment strategies. Additionally, inflation can have broader economic implications. It can lead to uncertainty and reduce consumer and business confidence. If people expect prices to keep rising, they may delay purchases, which can slow down economic growth. So, how can we protect ourselves from the effects of inflation? One way is by investing in assets that tend to increase in value with inflation. These include stocks, real estate, and commodities like gold and oil. These assets can act as a hedge against inflation, preserving and even growing your wealth. Another strategy is to ensure your income keeps pace with inflation. This can be done through negotiation for higher wages or investing in your education and skills to improve your earning potential. Finally, it's important for governments and central banks to carefully manage inflation. They can use tools like monetary policy to control the money supply and keep inflation within a target range. However, finding the right balance is crucial, as both high inflation and deflation can have negative consequences.